Hi, this is Jeffrey Cohen, coming to you live from Chicago, Illinois, and I'm here to speak to you about the week. It's week 3 of 2021, and we figure we better share what we're working on. I was right now just looking at the S&P 500 chart as I was preparing to give you this discussion. So what I'm going to do is I'm going to share with you a lot, a lot that's happened on the market, and what I've decided to do to make it easier is show it to you in text. So you can read it with me, you can spend some time. So I'm Jeffrey Cohen, president and founder of Chicago Quantum, which is a service mark of U.S. Advanced Computing Infrastructures Incorporated. We're an Illinois corporation focused on quantum computing, quantum advisory, IT sourcing advisory, and we're a pretty focused team. So first thing is, it's the end of the third week of the year. We got a few things to share. The change in presidents has caused a subtle shift of trading in the market. As a result, we ran the model, whether for clients or for ourselves, but we stayed out of the market. We made a tiny trade on Monday. We basically liquidated any of our positions. Everything else, by the way, is passively invested. So 95% of the wealth of the business is actually not in equities that we trade. Only one of the three um, key members trades, and right now we're basically at zero. So it's never a conflict of interest. It's always very small, just to really see how the model's working. So what do I mean by the market had subtle shifts? So oil did not do well because one of the first things our new president did was he canceled the XL pipeline, and that's kind of scary because it means maybe oil prices could go up or down, but maybe the U.S. won't have as much of a role. And so the quantum model, when we set it to run risky, picks a lot of petroleum, oil and gas stocks. And I'm going to show you a little bit about the market, but this is just the S&P. So we made just an enormous set of progress last 2 weeks in the market. And you see here the S&P was flat last week. If you keep looking, pretty flat for a week, ups and downs. So what I'm trying to show you here is when the market did not have a steady direction, maybe a light upward trend, the Chicago Quantum Net Score did great. My worry is if we look at the last 5 days, the market jumps and then it's up, it's down, it's just a different pattern. I'm not comfortable with the pattern, so I figured I'd wait and see. We're gonna wait and see, but we're still running and we're still getting interesting results. I figured I'd show you a picture. No, I don't want to do it that way. I want to do it this. Oh yeah, it's nice. I want to show you a picture of the market. This is FinViz. FinViz is one of my favorite visualization websites. So this is 1 week performance S&P 500. So if we just look at the top 500 companies in the United States, you see that this week consumer electronics, Apple, Microsoft, Google, Amazon, when it's green like this, it means it went up. Facebook was up almost 12% this week. So new president, big names, Home Improvement, Home Depot. General Motors looks good. Ford looks good. Some of the drug companies did better than others, right? Pfizer's down, Eli Lilly's up. But what's interesting is the diversified banks, the big four banks, which control, I want to say it's at least $1 trillion of U.S. deposits. I believe it's more than 10%. Each bank, or all four banks together, have at least 40% of U.S. deposits. Is down quite a bit. So something's going on with the financial market. But then we look at our favorite, which is oil and gas, and you see just a terrible week. The big players, the ones that we don't really touch with our model, down 4, 6%. Exploration and production, just having a terrible week. Look at that. Equipment and services. Look at Schlumberger down 6%. It's horrible to see. Halliburton down almost 12%. And so, just in general, right? midstream. I love the midstream market because they get fees from the pipelines and the services, the water that they use for fracking, um, down as well. So I think energy is at risk right now with the new administration, and so we'll just have to see. We'll wait and see. But I just want to show you what the market's doing, where we see the focus. The second is IBM announced earnings this week and had its investor call. And so we listened. In fact, I probably wasted way too much time and had to work late. Um, we listened quite a bit. Now, we listened twice actually, and we share our views of the quarter and a forward looking view. And the way I do this, not just on a video, because nobody really watches a lot of the videos, let's put a blog post in the Chicago Quantum blog. And so, what we talked about, there is a major strategy shift of the IBM leadership, and we thought this was important enough to talk about. IBM, according to the new CEO, Arvind, and I've met Arvind, great guy, really knows his cloud. Um, we're going to be a platform company, he said. Material reshaping of IBM's operating model to sell a platform. So when I think to myself, who are the large platform companies? I think of Amazon, Google, Facebook, Twitter. Um, Microsoft has really moved in that direction. And I wonder, can IBM play in this space? And when I think of IBM, I think of hardware. I think of mainframes. Love that. I think of like storage and software. And I think of services, and I think of white glove services. I think of very high end client focus, right? Like, let's really help the clients. I don't really think of a platform because to me, platform feels like low value. Low cost, low value, lots of scale. And so, again, though, if we look at the stocks, look at the size of Amazon. By the way, on this chart, the size is the amount of money that the company's worth. And so the capitalization of the equity, not the debt, but the equity. And we know Amazon doesn't really have any debt. So we look at Amazon, how big that square is. It's got to be, if I took a ruler out, see that little ruler? Oh, yeah, that's like 3 inches. That's almost 3 inches tall. I look at Facebook. Facebook is just like a dating app or something, a social app. That's 2 inches tall. Google, 2 inches tall. Microsoft, oh, who doesn't love that stock? 2.5 inches tall. That's a big value. The whole thing is only like 8 inches tall. So if you're 2 inches tall, you're a quarter of the market cap. I mean, you're running big basically in this case. You're a big player. Apple's huge. Now we look at IBM. Well, first off, it's down 8%, and it's pretty tiny there, at about a little under an inch, about 3/4 of an inch. So IBM, 3/4 of an inch. Amazon, almost 3 inches. It just shows you they want to be like Amazon. Look at Netflix. Netflix is up 13%. Netflix might be worth more than IBM right now. It's crazy. Platform company, right? Netflix, Disney, Comcast, Charter Communication, Verizon, AT&T, T-Mobile. These are all companies that are platform companies. And so I get it. PayPal is a platform company. Looks like it's worth more than IBM. So they want to move in that direction. Look, I get it. It's where the money is, but it's not. When I think of IBM, that's not what I think. And how they're going to become a platform company is they're going to focus on artificial intelligence and hybrid cloud. I don't understand. So let's keep going. Maybe it's there somewhere. The systems unit will continue to provide high value hardware. Software will continue to perform, but with shorter enterprise license agreement durations. Their services will be provided exclusively by Global Business Services, which focuses on applications and hybrid cloud adoption. They actually deliver quite a few IBM Cloud and Red Hat implementations. IBM is spinning off a new co. This is the company I used to work for at IBM, called Global Technology Services, Infrastructure Services, and Technology Support Services. It's costing them $3 billion to do so. It should be completed by the end of the year. Managed Infrastructure Services. So that's an integrated unit. I think it's got 4,600 clients. It's a pretty big business. And in the discussion, this is just the thing that hit me, was there was a lot of focus on the numbers. that the moving forward they're going to focus on financials, maintaining and growing margins, driving free cash flow, deleveraging the balance sheet. These are all pretty much quotes. And becoming more efficient as a business. In fact, even IBM Global Finance is limiting its new lending focus, and IBM's selling off receivables. They did that last year as a way to mitigate risk and free up cash. And there was a mention of a small thing they're doing to make it a little easier for IBM customers to do business with IBM around sales category alignment. Now, a client will be in the same category for each of the IBM divisions and segments. Before, I guess they were different, so you might have different coverage models. They're going to invest $1 billion in the IBM ecosystem. And the IBM business is slated or targeted to grow mid-single digits. So I think of that as 3 to 7% CAGR after the divestiture. So IBM is looking to get back to growth, 3 to 7% a year. I think it's terrific. And so I have a lot of opinions that I'm free to share on my blog. I'd like you to take a look. Yeah, pretty strong opinions. I would say the biggest opinion, the CEO talked about quantum computing, which is pretty amazing because, I mean, I love quantum computing. We're Chicago Quantum, right? And what he said on the earnings call was, quote, quantum computing, my word, has the ability to unlock hundreds of billions of dollars of value for our clients. And then he talked about how IBM was committed to a roadmap of delivering larger quantum computers, and that IBM has been deploying more quantum computers for clients to use. In fact, this week we used an IBM quantum computer, Melbourne, and we're going to talk about that later in the video. So I love to think that our small company is in a business that IBM says will unlock hundreds of billions of dollars of value, and that it's important. It's important for IBM to talk about it. So take a look at the blog post. I'm sure you're going to get a lot of insights there. Let's go back. We did something a little different this week. Alex Kahn, who's a senior associate in the firm, he's like, Jeff, and I was on a call with Clark Alexander, who's another senior associate with the firm, and they said, Jeff, I think it's time to do the gate thing, the gate computing thing. We've been doing quantum annealing for so long. Let's give it a shot. And I'm thinking to myself, we got to the point where we can run our model. We run it, we pick stocks. I got a book where I write down the stock picks. People pay us to do it. It's starting to feel a little old hat, right? We use a quantum computer, we pick some stocks and make some money. Where's the research? So I actually went back to our NSF grant application that we did over a year ago. By the way, the National Science Foundation is still reviewing our grant application. Hopefully, if you're listening, Peter, please, as the project principal investigator, please fund us, because now we're doing the next part of the NSF funding grant work on our own nickel, and we sure could use some help. We picked a bunch of good stocks here. Oh, don't look. All right. Money in the bank, basically. They went up on Friday. It's killing me. I should have invested. But the point is, let's learn something new. And so we signed up. Chicago Quantum had let its registration lapse. We found the IBM tutorial for portfolio optimization. We customized it, and we ran it. We actually optimized a 6-stock portfolio on a real IBM computer, on an IBM simulator, a quantum simulator, on classical solvers that were provided by IBM Qiskit. And it was pretty cool that we did that, actually. And we shared our results. We actually shared them in 2 blog posts, which I'll show you. One is a non-technical one. Almost feels like a press release. Oh, we did this. Here's how it went. The next one was quite detailed. It's for a technical audience. We actually got some love on Twitter, which I want to thank Chris Savoy. I want to thank Peter Morgan and others. Alex, who's a new friend of ours. Not Alex Kahn, a different Alex. People are giving us some love, right? Because we did it, and then we share the code on our public GitHub. So if you want to pick stocks on an IBM quantum computer, just go ahead and download it. It'll take you 15 minutes, set up an account, run it, and then see if you can emulate the results. It'd be a great training if if you're interested in learning more about quantum. And so we do that. And I'm going to share these results for you because I think it's interesting. Now, let me make you can't read that. I can't read that. I wish there was a way I could change the coloring on the screen. Um, First off, we'll zoom in. This is part 2. Let me go to part 1, which is give you the backdrop. We run and optimize and customize the IBM Qiskit tutorial for portfolio optimization. So there's nobody out there. Come on. Please ask a question or make a comment. It gets lonely out here. It does. I really do appreciate when people ask questions or make comments. It's helpful. Um, so what did we do here? What are we talking about? Well, the author's me. Actually, they brought me up to speed. I mean, our team knows how to run gate-based computing. They do it all the time. One of them actually teaches a class at college doing this for students. So we spent an hour and a half, and we did it. It didn't even take that long. Of course, we customized it. We added extra steps. We printed things. We changed things around. We did a lot. And there's no math needed to understand this. So let's keep going. And Alex Kahn is our teacher. Thank you, Alex, for teaching us how to do it. So we first ran it on simulators using IBM Qiskit, and then an IBM 16-qubit system called Melbourne, Australia. It's not in Melbourne. That's okay. And I'm sorry, we ran it for a long time. So we run it in a Jupyter notebook. We pip install Qiskit. If you don't know Python, you'll need to know Python in order to run the IBM Q Experience. So we use Anaconda. It's a package management system for Python. It works great, just so simple. And we install Qiskit by typing 3 words in a root terminal. Pip install Qiskit. If you don't know what that means, chat me up, buy an hour. I'd be happy to help you get up and running there with Python. And so I make a comment there. It does go easier. It does go easier if you code in Python already. We're not going to talk about that. Public service announcement. So we run the code for inputting the stock data. So IBM gives you that code. And then there's some parameters, like the number of stocks, risk tolerance. And then they do a thing, it's called a NumPy minimum eigensolver. So eigenvectors, find the smallest eigenvector. It's fine. That's how they do. They're classical. We do things like particle swarm with like a swarm of bees that's going after the best stock portfolio. Or we'll do simulate a bifurcator, which, by the way, last night or Thursday night did very, very well. I think of a simulated bifurcator like a crock pot that we use to cook chili, and it heats up, gets a lot of pressure, and out pops, pooh, there's a stock portfolio. Pooh, there's another one. And we just grab the best ones. It takes about a minute, maybe 30 seconds, minute and a half to run. We actually get really good stock portfolios out of it. And then there's, of course, the tried and trues, right? Your genetic algorithm, simulated annealers, of course, Monte Carlo, which only really finds the answers in the simple ones. But that's okay. We don't check that the answer is the best. We just assume it is. We think it's using randomized data. That's okay. And the best answer picked 4 stocks out of 8. Again, we didn't check, but that's okay. We then run VQE, variable quantum eigensolver. It didn't find the best portfolio. We did adjust the risk score. This is kind of cool, to be 4 times larger, and then it found the correct solution. So similar to the way we tune our algorithms, we tuned VQE. We gave it a boost. So what we're doing, how do I explain this? Let me explain it the way the guys at D-Wave explained it to me. By the way, I love D-Wave, but this is about IBM now. So here's the floor state, okay? This is ground zero. This is don't do anything. This is the whole kind of universe of the 8 stocks, right? And if it's really close to the bottom, you might not actually find any good portfolios because it doesn't jump, right? Or maybe it's the other way. Maybe it's too far away and it stays at the base. So what we did is we increased the risk tolerance, which created more separation. And then we created more like curvature of the data flow. And so what happens is when it finds something, like the best one would be really low, right? It would be high. So it's going to be easier to find this point. It's not going to find that point. It's too high. And over there, it's going to go right to the bottom. And it succeeded in jumping. Look at it like a bean. Jumped, found the best one. Now VQE did a little homework. Variable quantum eigensolver. I gotta find something that's easy for you to understand. It's developed as an alternate algorithm of quantum phase estimation. That's not helping me. It's a quantum phase estimation. You know what I mean? This is a non-technical article. I need something simple. Let's find something simple here. So Penny Lane. By the way, it's not just a Beatles song. Xanadu, company out of Canada working on photonics. So think of laser beams shooting light into mirrors, splitting the light. Now I got two photons that are entangled. I can use them for calculation. By the way, I think we can also use that for sensing. Right? We get two photons. One we send up into space, into the sky. Oh look, there's an airplane. Oh, bounce back. Compared to this one, they're still entangled. By the way, they match. I got an airplane up there. I don't have to send a lot of photons either. I could actually be very low energy, as long as I keep my entangled photons pairs, keep them in track here, right? So pretty cool. You could do that. We love it. We love what Xanadu's doing. Penny Lane is their system that they offer. So that what they wrote made sense to me. The variational quantum eigensolver is a flagship algorithm for quantum chemistry. It's for quantum chemistry. That makes sense, right? So it's not so good for picking stocks. You got to really twist it because it's not made for that. It's made for energy simulation of natural systems. That I get. We're good. See? Molecule ground state. That's why, again, you got to create some separation, right? Oh, look at that. Oh, I'm going to find that point as opposed to the other stuff. So, by the way, non-physicists explaining physics, I hope you don't mind. I'm sure plenty of people are hanging up the phone right now. They're like, I can't take this guy. So, but I find this very interesting because variational quantum eigensolver didn't work that well, but it was okay. It's okay. So let's take a look. What else did we do? It's funny we wrote this down. It's a lot of bravery when we do that. And then we ran it on the quantum approximate optimization algorithm, QAOA. You see it has the word optimization in there. It's made for optimization. The problem is that gate-based quantum computers aren't that good at optimization. They're not made for that. I'm going to explain in a little bit why it's maybe part of the problem, but so with 4 and 8 assets at a time, because we ran it also with 4 assets, which we could pretty much do with a stick and a calculator and the sand. We could, like a tic-tac-toe, we could find the best stock. But it only found the best portfolio stocks with a small probability for 8 stocks, where you got, like, roughly speaking, maybe 60 choices, 64 choices, maybe even less, maybe 40 choices. The best portfolio was only found with a 1.5%, 1.4% probability. Even random, it should have been 2%. But truthfully, it should have done better than random. And QAOA was better than VQA, which I think was actually the key learning in this whole thing. We showed that QAOA was better than VQE for portfolio optimization. Then we ran it. We also ran it on the quantum simulator. It gives us a look and feel. So what happened is we ran it for 1,000 shots, and even the best answer it found was not very good. Just leave it at that. Excuse me. Then we ran it on the IBM Q. We sent it 1,000 shots, 100 seeds, and let it fly. Wow, did it take a long time. Each shot, or seed in this case, I'm not even sure, it took about an hour. So, we run the D wave. We say, give me 100 runs. And then we say, give us like whatever, 2 stock, 3 stock, 4 stock, 5 stock. The new one makes you wait 10, 15 minutes. The old ones that we love to use, the 2000 Q, it's quick. Maybe it's 15 seconds to wait. So in this case, hopefully we can get from 15 seconds, we can somehow beat 5 hours to do 6 shots. But that's okay. It's a very busy quantum computer. Extremely busy. We reviewed the first 6 shots. In general, what's funny is the quantum computer did what we did. It said, keep your money. It said, don't buy any stocks. The best answer, the most common answer, was a 0 stock. The second most common answer, and second, third, fourth, fifth, sixth, seventh, was to pick 2 stocks. I'm sorry, 1 stock. In a few cases, it wanted 2. So it really wanted small portfolios. And so we think this is a more technical thing. We think that the answer is more randomized than expected, right? So, and there's a bias, we think, to drop to 0 value. 0 means no stock. And so if there's a bias to losing your entanglement in the system, then you're going to return to the ground state. It's no problem. This all goes away. Oh, look, there's no entanglement, right? Ground state, 0 stocks. Jeff picked 0 stocks. This is what we found on the system. When we really pushed it, what we found was the best answer might be here, right? Best answer's here, but unfortunately, the errors, I think it's the errors in the system or the bias in the system, tilted the energy landscape. So now, the best answer was the least common. We got to fix that. And so actually the team has decided we're going to fix that together. You're going to see. And so we were ready to run on Athens, which is a 5-qubit system, but we waited hours for the other one. So I guess my takeaway too is if you want to learn this, just join the IBM Experience. In 20 minutes, you could take our code out of GitHub. Here's the GitHub. Just take it out of GitHub. There it is, running the 8 stock portfolio. Just grab it. Grab it, do a download, right? Do a grab, do a pull, I should say, if I'm being technical, right? Do the pull, get in there, get the code. You got to sign up. So you got to put your token right there. That's the only thing you got to change. Everything else runs, right? Run like crazy. Run the code. Boom, boom. Oh, look, I even got my expected results there. So you could see what's going on. They show you a nice picture. They get the budget, the penalties. I wanted to print all that because I felt like you needed to know what was being done there. Here's the optimal answer: 4 assets out of 8. It's stock 1. It goes in Python. It goes 0 through 7. So 0, 1, 2, 3, 4, 6, and 7. It's a negative value. It's good, so your answer should be negative, right? We like that because we're minimizing, right? Everything else is positive. It's too high. And we just show you kind of what it's doing there. Got lots of code, and actually we do some print statements that show you what we learned. So if you don't get answers like we got, and you don't get the same essence of it, then you can call me, right? You can email me, Jeff, what happened? I'm getting the best answer. Well, what did you do differently? I don't know. Let's take a look. Maybe I ran VQE differently, or I ran QAOA differently, or Jeff, I got into Qiskit and I changed it a little. I did something different. Well, I want to talk to you because if we can pick stocks with the IBM, we're all making money here. So I just wanted to show you the non-technical write-up. Now the technical write-up, a little different. So this is a crosstalk matrix. So you look at the qubits on the IBM Melbourne system, and you see that there's a lot of dashes. The dashes means there's no ability to communicate between the qubits. So each qubit, like we look at 13, 13 talks to two other qubits. It talks to 1 and it talks to 12. That's not a lot of connectivity. Let's see if I got a chart for that right here. 13. Well, here it says 13 talks to 14, talks to 12, talks to 1. Let's see. 1, 13, 12. Does that look right? So 1 talks to 13. 12 talks to 13. Wait, which one? 1, 12, and 14. Oh, there is no 14. So IBM decided to not put that data in the chart. So I'm pretty confused because it says that there's qubits, but they're not talking about them. So that's okay. It's weird. I don't understand. The other thing we saw, like Python, qubits are numbered 0 to 14. So that means there's 15 qubits. 2 of them are down. 2 of them have no frequency, graph output frequency. And one of them's kind of light. And so it's interesting, 8 and 12 are down. So it looks like they have 13 functioning qubits out of the 15. One's a little hurting. And you see it here, right? 8 and 12 are dark. Some other things that were interesting. So what's a C naught? What's a C naught? I need to explain this because a controlled NOT gate. Not. So is it or isn't it? So you use it for entanglement. It flips the second qubit if and only if the first qubit, the control qubit's a 1. So if the first one's a 1, C naught, flip the second one. So the way I might use this is I might create a daisy chain, right? This qubit's a 1, then make that qubit a 1, then make that qubit a 1. And so maybe I'm filling my matrix with 1s. In Python, it's easy. We just say 1s, NP1s. But here, I probably got to use a C naught, and I got to build. Now, the problem is your C naught gates have errors. In this case, on this day, the error was 3.3%. So imagine, number 1, that's better. Number 1, 3% error. Whatever. Probably still fine. Second one, 3% error. Third one, 3% error. But by the time I get to like 10 qubits, I got like a pretty high error rate. The probability is catching up to me that I'm probably going to miss a flip. So now I'm supposed to have all 1s because I set the first one to 1 and I'm just C-naughting my way across. But now at the end, maybe I got some 0s. So maybe 10, 11, 12, 13, 14, 0s. Well, already now I'm not picking the stocks. I'm already biased towards nothing, right? And then the range is 1%, 1.2%, 7%. So 1 to 8% range on the average C-naught error. So then you got an error readout, a readout error. So a readout error says at the end, did I buy this? Do I buy the stock? Jeff, tell me, do I buy it? You get a bunch of stocks in the book. At least on the D-Wave, it's pretty good. It tells me what stocks to buy. You want me to tell you what stock to buy. I'm not going to tell you yet. You got to listen all the way to the end. So I got our error rate. So now I got a 6.5% chance of being wrong on each of those stocks. That's not helpful. My decoherence time, some people call this coherence times, measured by T1 and T2 are at 53 and 62 microseconds respectively. So in 53 microseconds, I really do have plenty of time. That on the D-Wave, I'll run it anywhere from 20 microseconds up to 200, just for my own experiments. And I seem to get good answers out of 200, but here I got to keep things short, 50, 60 microseconds. That's how long I can hold entanglement. Remember we talked about the Xanadu where I'm shooting lasers at a mirror and I'm holding. Well, in that case, I could shoot one of those photons into the atmosphere, bounce off an enemy aircraft, come back. I mean, I don't know that it's longer than 53 microseconds at the speed of light, but sure feels like it might be buttoned up against microseconds. So, not a lot of time. Now I want to talk a little bit about, it's too detailed. So, what does it look like? I'm picking stocks, right? So the first thing I did was I said, let's make C1 equal to C2. C2 to C1. Qubit 1. Qubit 1 to qubit 0, qubit 2 to qubit 12. Oh, now I got a lot of communication, right? And so 3% error, don't forget, but that's okay. Let's assume everything worked great. So I go through, I'm figuring I got 50 microseconds. I probably got what, like 10 things? No. At the end, here's what it looks like. Then I do my readouts, and I get my 8 stocks. Because again, am I buying or am I not buying 8 stocks? So I'm reading, and if you look, not all the qubits are used. So stock number 1 is actually qubit 4. It's Q3, but like Python, the first one's 0. So qubit 4, qubit 5, qubit 3, right? Those are my first 3 stocks. It's kind of interesting that it did that. So the thing that's important though is there's 406 logic operations. And logic, I don't know if these aren't gates. These are logic. There's like circuit depth, right? This is how many of these things there are. There's 406. Some of them have more than one qubit being operated on. I think that's too long. I think by the end, I'm mostly random here, right? This is what's interesting. It took 46.4 minutes to run. That's mostly queue time. And actually, each run took about 7 seconds here. On average, it took 7 to 7.5 seconds to run a quantum algorithm on a quantum computer. I'm actually quite surprised by that. And again, I'm just comparing to D-Wave, right? On D-Wave, we're running in half a second, quarter of a second. Here I'm at 7 seconds. So even if there's no queue time, still a long time. So there's a list of machines. So some of these machines aren't that busy. So we picked Melbourne. It had 3,285 pending jobs. It's busy, right? It's busy. The Chasm simulator, only 3 pending jobs, not that busy. So we ran on the simulator. Thank you, IBM. That was great. It ran real fast. But if we go to Santiago or Athens, we're running on the Canary R3 chip type. Very few jobs. So if we can pick 8 stocks using a 5 qubit model, maybe we're good there. I don't really know how to do that. I have a feeling 5 qubits means 4 stocks, but check it out. We're going to learn, and we're going to do better next time. So this was a lot we accomplished. I just wanted to share that with you. So going back to our Chicago Quantum Net score, we found a way to select lower risk and most likely lower return portfolios that are still efficient. They still have a strong Chicago Quantum Net score. That means they still have lower risk than just a random sampling, a diversified sampling. Lower risk, higher expected return. So you're still picking winners, right? And so I got them in the book here, right? My best pick, high risk, was 1 stock or 2 stocks or 3 stocks. In the lower risk, it's got to have the diversification. The best answer, bar none, letting this thing run a long time. 6 stocks. So I think we're going to be adding that to the website. I think when you go to buy a portfolio now, you're going to be able to buy high risk or low risk. I'm going to have to figure out, through a lot of experimentation, I'm guessing, and some visibility to you guys as the listeners, the different pieces. So high risk, low risk. High risk, low risk. Think about it. You're nervous about the economy. You're nervous about a new president. You're nervous about interest rates. We got to talk about interest rates, but that's probably for another day. We got a lower risk scoring model. That's cool, by the way. I'm really happy about that. So we've determined as a team that the quantum approximate optimization algorithm, QAOA, is important to make gate-based quantum computers pick the stocks. We also determined that the sample QAOA that they gave us did not work that well. The VQE didn't work all that well either. So there's more work to do. We're going to do that work. We are going to work on the QAOA, the quantum approximate optimization algorithm, and we're going to make it pick stocks. Now, it may be that it picks 4 stocks on the IBM Q 5-qubit system, and that's fine. And if it picks 4 stocks perfectly every time, maybe it's worth it for us to pay IBM. Hey, give us access to the 53-qubit system. May cost us $1 million, but we might make that in options trades in the first month. So, or our customers, you might be making money on the IBM Q. So we're excited about that. We also picked up advertising over the past week on our website, chicagoquantum.com, and then we stopped advertising when we got the learnings. So our website is very focused on what we do. I just thought that was the way you do it, right? You know, here's our company, here's our team, here's pictures of us, here's our history, and here's the services we offer. No. I think I got to make it more about what you're searching for. Answer your questions. And it's exceedingly slow to load. So we stopped some of our advertising. We're going to fix it. And when I show you it's slow, we asked Google, how slow is it? Google, my system is slow. How slow is it? It's so slow that a turtle with one leg tied to the shell could run faster than our system on a 4G network. Poor, slow rating. Starts to load in over 4.5 seconds. 6.3 seconds. In 6.3 seconds, I could run a job on the IBM Q network. So, come on, guys. Speed it up. Speed it up. Make it personal. Okay? I don't know how to do that. I'm not an SEO guy. Make it seamless. That we're going to look at. Can we make it easier to buy, easier to sign up? The biggest thing, though, is boost your speed, make it fast. And so if any of you out there listening are really good at making a fast website and also helping us with some of the more, making it personal, give us a call. And we might hire you to do some work for us. That'd actually be real nice, real helpful. It's too slow. We look forward to the next week. So I want to leave you with one thought. Learn more and do your own due diligence before investing in the stock market. Investing in stocks carries significant risk, and you can lose your entire investment. Do your homework. Know what you are buying. And I want to give you an example. There's some weird things going on in the market, and when I say that, you may not understand what I mean. So let's look at AMC, the movie theater company. By the way, I love the movies, right? So it's a $2 stock. It's been a $2 stock for a long time. All January, right? Now the reason is I already did my homework on the stock, right? AMC Theaters has $10.5 billion worth of debt. I don't know how they're going to pay that off. I don't think they know how they're going to pay it off. And so what happened is, right around here, some of the guys I follow on Twitter, what I call the pumpers and dumpers, Laid Black, Atlas Trading, Rick Morris. I hope you guys aren't offended that I'm giving you some cred, some publicity. But they said, let's pump AMC. Let's do it. Let's buy it and let's make the short sellers scream. And so there's some big money going in. Look at that, 31 million shares. $90 million was traded in a half hour. $90 million was put to bet on pumping up this stock. And so already went from 230 to 260, right? You're like, hey, I'm making money here. I'm making 10, 15%. Pops up to 3, pops up to 330, comes down, but now, wow, look at that. You're up to 350, 370, 350. So if you're not in the know, if you're not in Twitter, if you're not watching some of these cartoon characters, laid back, he posts food pictures, but he's pumping a stock. He's pumping a stock, pumping a stock. And if you're not watching, you don't understand. So you buy it thinking there must be something new in the movie business. But what you don't know is it's a pump and dump. You got to know. And this is the problem, right? So there's going to be like people, real human beings, that put their retirement money thinking, oh, we're all going back to the movies, right? They still owe $10.5 billion. They're still on the edge of bankruptcy. So be careful. The other one was Gamestop. There have been people pumping GameStop the whole time. Look at that. So basically, this is a $20 stock. $20 stock. $20 stock, right? Since January. Now, before January, it was still a $20 stock. But you take a look, it's got some movement. Now, what happened? Well, those same guys decided that we should squeeze the shorts. Same guys, same play as AMC. So let's put some money to work here, right? Maybe not as much. It started a little slower. Million shares, million shares. Look at that. Every 5 minutes, million shares, 2 million shares. So and the problem here, the reason is, look at that, 5 million shares in 5 minutes. Okay, it's a $30, $40 stock. So to put a million shares, it's $40 million. That's 5 million shares at $40. That's $200 million, right? For GameStop. I mean, I love GameStop, right? We buy games there. But I'm not putting all my money in it, right? So what happened is they want to squeeze the shorts, right? And so they kind of held the course. They got it up from $20 to 35 to 37 to 41 to 42. So you're thinking to yourself, oh, GameStop, there must be a sale on cartridges or something. Atari cartridges, right? Like, we're all buying, right? Like games. Stupid. There's no sale. There might be a sale, but that's not the point. The point is the pump and dumpers are up. Look at that. It is $73. Come on, guys. So now imagine you didn't know this. We're right in the middle of a pump and dump. Got to be careful. You got to know what you're buying, and you got to know you do your homework, because this pains me. So I've even tweeted on this that this is an in-play stock. It's in play because the pumpers and dumpers are out there. They're squeezing shorts, and so let's be honest. You put money in there at $20. It's at 60. You sell at 60, 70, 80. It's fast money. So I just want you to know, just please be careful, right? Learn. Really think about it. And so we did run the model again. I told you that we would talk about that. And so here's what I'm going to do. I'm going to say thank you for listening. If you'd like, go to our website. It's a nice website. A little slow. Right? Chicago Quantum. Buying an analysis. If you like a quantum analysis, because that's the whole point, right? They start at $50. You can get a quantum analysis for $150. You get a regular one for $50. So what I would say is, check it out. Check it out. Click buy. Give us your 64 up to 64 tickers. By the way, we answer a lot of questions. I'll provide them here, or I'll email them. I want today's intraday, or I want after market close. I'm going to give you the stocks right here. I'm going to tell you got a preferred number. My objective could be, I want to be low risk. I love your show. Just kidding. I really don't love your show, and I want to buy one, hit buy. Point is, if you got 64 stocks, you could drop them in. You put in some extra tickers in case we validate some of them out. $150. We take PayPal. We take credit cards. Give me your email address or log into your account. And let's rock and roll. And that's it. You're done. And as soon as I get this, I'll email you. Maybe I'll make contact. I'll call you. I'll be like, hey, I was going to run it right now. Is that okay? Is there anything special I should know? Or I just go ahead and run it and I send it to you and we wrap it up. So I want to thank you very much for listening. I'm trying very hard to keep you guys up to date every week. And we love having you. And I'm going to end the stream. Take care. Bye bye now. By the way, if you like it, please subscribe. I try to do this once a week. Take care now.